Hi, this is Abraham Walker with Ask A Walker, your Northern Virginia real estate agent, and I'm back with Jay Hoffman with Moving Mortgage. This is episode 3. It's good to see you again, Jay.
You as well?
What I want to do is, it looked like the VHDA video that we last shot is getting a lot of traction, and there are some questions that we did not answer in that video that I want to get to in this video to kind of complete the conversation on the VHDA product.
Nice.
So I already have a list of questions I'll go through, and I'll ask those questions, and then we can have a dialogue. So Jay, what is considered a first-time buyer, or what does Virginia Housing consider a first-time buyer?
First-time buyer is simply put, there's two different kind of sections. There's one person that has never bought a home before, and then there's the other one that qualifies as a first-time home buyer if he hasn't owned a home in 3 years. 3 years.
Okay, so if you owned a home but you sold it and you've been renting for the last 3 years, you're still counted as a first-time buyer.
Absolutely, yes.
Okay. What's the minimum credit score required to take advantage of the program?
Real quickly, the program also changed its name back in March to Virginia Housing. Before that, it was Virginia Housing and Development Authority.
Okay.
So the minimum credit score will be 620, and it actually just came back to that. With COVID, the scores were higher, the minimum scores were higher, but we're now back to our normal 620.
Gotcha. Okay, so 620 credit score would qualify you for the program.
Yes.
Okay, that's good. That's good to know. What was it before when COVID hit?
It went up to 640.
Oh wow. Okay.
Mm-hmm.
All right. So 20 points.
And it actually, to be honest, it went away for almost 3 months. We didn't have it.
Oh, the program went away altogether?
Oh yeah. And Virginia was the first state in the country to get it back. They were the first one.
When you say Virginia was the first state to get it back, are you talking about this type of program?
Yeah, it's a bond program, right?
Okay, a bond program. Okay, so
Right.
Virginia was the first state to get their bond program back. And when did they get it back? Do you recall?
Let's see, February, March. I want to say like June or July.
Okay, June.
Mhm.
Okay. All right.
I
So
think July.
the next question I have for you is, now you're licensed in Virginia, correct?
Yes.
Okay, so that means that you could help somebody with this program in any part of the state.
Correct. Yes.
Okay, all right. Because I know some people in the previous video in the comment section, they had questions about whether or not you could assist them in different parts of the area, and I wanted to make sure that people are clear.
It is important to note that not all lenders have VHDA. Not all brokers have VHDA. There's extra licensing and hoops that you need to jump through to be able to have it.
Okay, all right, perfect.
Mm-hmm.
And so you could service somebody in the Richmond area, Hampton Roads, throughout all of Virginia, right?
All of Virginia.
Okay, all right, perfect.
Mm-hmm.
So I'm in Northern Virginia, and so a lot of the people who watch this video are in the Northern Virginia area.
Mm-hmm.
What is the income criteria for Northern Virginia, the Northern Virginia region?
Okay, so there's 3 tracks.
Okay.
There's the grant track where you're putting 1% down. In Northern Virginia, it's 110,000, but it's different for every county.
Okay, so
for the grant track, putting 1% down. If you're going to do the 100% financing or the 101.5% financing in Northern Virginia, the median income is, or the minimum or the maximum income is 138,200.
Okay. Okay.
But again, it's county specific. It's Googleable. I can't share to this screen, but I have a list of all the counties and what their income limits are.
Okay. All right. Perfect. What are the 3 programs? What are the programs that are available through VHDA? Because it's not VHDA doesn't just or Virginia Housing doesn't mean one program. I guess there's options. So what are those options?
The simplest way I can break them down is it's really the amount of down payment or the amount of cost. So the maximum, the most you're going to come up with is 1% down payment, and then again you got to account for closing costs. And then
When you say account for closing costs, do you mean that the individual participating in the program will have to pay for the closing costs?
they will either have to pay for them or find another way to get the money, which we
Gotcha.
have ways.
Gotcha. Okay.
Mhm.
Okay, continue on. So you said that there's the 1% down.
Then there's a no money down.
Okay.
Okay, so with that program, you just have to account for closing costs.
Okay.
And then there's the 101.5 program where you're going to get 1.5% of what you borrow to help you pay your closing costs.
Okay.
Mhm.
Okay. Excellent. And so we have I guess the 1%, the 0%, and then a 101.5.
Correct.
Okay.
Those are your three tracks.
All right. Excellent. And just to be clear, the 101.5 is a program where you actually get 101.5% of the loan.
Yes, that is correct.
Gotcha. Can you talk a little bit about the mortgage credit certificate?
Yes, it's actually it's extra money you can get back if you're enrolled in the program. Now, if you're enrolling in the program outside of Virginia Housing, there's typically a $500 charge or a $1,000 charge. I can't remember what it is, but it's something that you have to pay to be enrolled in this program. When you go Virginia Housing, you're automatically enrolled, and it's a dollar for dollar tax credit up to X amount of dollars that you can get back from your taxes. It's more money you can get back from your taxes every year.
Oh, wow.
As long as you keep the loan.
And so is that something that, do you have to go through the VHDA program to qualify for that, or is that?
It's available outside of VHDA, but it's free if you go through Virginia Housing.
Okay.
And it's like a hoop you have to jump through at the very end. It's like, you have to fill out a form and it gets approved.
Okay.
They all get approved, but it's just an extra, little bit of time that it takes at the end.
Is that something that you take care of?
Yes.
Okay. All right. Perfect. So if somebody wanted to take advantage of the mortgage credit certificate, they would just reach out to you.
Right. Well, honestly, if I have them in Virginia Housing, I automatically give it to them. I mean,
okay.
Why not? It's extra money,
Excellent.
Mm-hmm.
Perfect. One thing we talked about in our call leading up to this video was something about you mentioned about a net zero transaction.
Yes.
Tell me more about this net zero idea.
My favorite part about this whole thing. So Virginia Housing, what their biggest benefit they help people with is helping them with their down payment. And the three forms that it takes are what I just told you. So the way to take the most advantage of this program is by negotiating a contract and then going through VHDA, applying for the 101.5.
Mm-hmm.
Okay. Now, with your ratified contract, you're going to have to come up with an earnest money deposit.
Right.
Okay. So we ask that you use your debit card to make that deposit, and then you are going to also use your debit card to pay for your appraisal. And so we have to either use a lender credit or a little bit of seller concessions, and then it will make it what I call a net zero transaction so that the customer can get their earnest money back at closing. And then after the loan goes through post-closing, they'll get a check back for what they paid for their appraisal.
Okay. So in this scenario, you're saying that the earnest money deposit and the appraisal fee, you can get those back through like some type of credit.
You can also get things like extended warranties. You can pay ahead your HOA dues.
Okay.
You can do this with all the extra credits again. And here's another cool thing. So say your lease ends in January, so you apply for this, you close in December.
Right.
Okay. If you do that, you will not have a payment in January, and your first payment on the loan would be in February. This way you could roll right into being a renter to a homeowner.
Gotcha.
Or you could skip a payment. If you close in your last month of your lease, then you'll skip a payment, and that'll give you an extra buffer to help prepare for the future to make your first mortgage payment.
Nice. No, that's a cool idea. So net zero transaction, that's what that is. Right?
I made that up, by the way. If you Google it, it's not going to come up.
Ladies and gentlemen, that's a Jay Hoffman exclusive. Jay Hoffman exclusive. So Jay, let me ask you this. You just recently did a class last week,
Uh,
right? That was your first in-person class, which was probably a little weird given the circumstances.
I felt like a hazmat guy.
What what questions came up at the class that we can discuss on this video so that in the event somebody's maybe taking a class online, they're not really able to have like a back and forth with the presenters. What question last week was asked that you feel would bring some value to the people watching this video?
Well, first thing that comes to mind, this is we could do a whole segment on this, but like there's a lot of people that are apprehensive when it comes to letting lenders pull their credit report,
Right.
and they're confused as to what part of the process should they let this happen, and it's my suggestion to get as much of the pre-approval done up front before you even look at your first house. And that unfortunately involves not when I mean fortunately, because it's not really a bad thing when you get your credit pulled. The most it's going to do is it's going to hit you for 2 to 5 points, and it goes away, and the inquiries can be lumped together within 14 days. So I find that every one of these classes I do, I have to explain that to people, and that's not a problem. But they think it's more of a penalty than it really is.
Okay. So you're saying that people ask you a question about the pulling their credit for the mortgage application. It sounds like they're concerned that the pulling of the credit process will negatively impact their credit score. Now, I
Mhm.
guess my question is, what are they using their credit score for other than these inquiries? Because
The
those,
credit score, that's the biggest part of it. So there's a process of deciding. Now there's 3 tracks. Remember I said, so you're either going to go FHA or
right?
conventional. So the credit score drives the cost of the mortgage insurance, which if your score is below 680 or 670, the cost of the mortgage insurance going conventional is too expensive. So you're automatically going to go FHA. So the credit score really kind of drives which program you're going to use on, depending on which track you go.
Gotcha. Okay, so let's
Mhm.
back up here. So you're saying that your credit score is important because it'll tell you which product you're going to use to begin with.
Yes.
Gotcha. Okay, and so you're saying that the conventional product is a better deal for people who have credit scores higher than 680.
Yeah, so it's important to distinguish FHA versus conventional.
Okay.
Conventional is hands down a better deal, unless you just get a massive interest rate spread that you can't overcome. Because when you go conventional, you get credit for all of your down payment. When you go FHA, they require a minimum of 3.5% for a down payment, and then they take half of that, and it goes to what they call the upfront mortgage insurance premium, which is FHA's insurance for if the customer doesn't make their payments. So you don't have that with conventional. Also, the way that you can't get rid of the mortgage insurance with an FHA loan unless you refinance or sell. If you have mortgage insurance on a conventional loan, you just have to show the lender, the servicer, that you have 20 or 22% equity position, and then they will forego your mortgage insurance payments.
Oh wow. Okay.
Hmm.
Okay. So it sounds like there is a very good benefit to actually having that 680 credit score.
Yeah, yes, but see, they compete against each other. So the FHA mortgage insurance is really not that expensive,
Okay.
but if you track the credit scores and what the cost would be, that's about the break even where your mortgage insurance is going to be more than what the FHA mortgage insurance is.
Oh, gotcha.
Hmm.
Gotcha. Okay. All right. Excellent. What other any other questions came up at the class that you think that maybe somebody taking an online class? And just to let people know, there are 2 ways that you can actually get your Virginia Housing Certificate to qualify for the program. You can either sign up for an in-person class, which Jay is one of the top trainers in the state as far as the numbers go. And then the other option is you can actually take the class online. Now, with the online class, I think there is some type of test at the end of that class, right, Jay?
Hmm.
Right. And so, but in the in-person class, there is no test, but you also have to forego 7 hours of your life.
Yeah, exactly.
Right.
Um, there's a lot of good things that I don't like to talk bad about the competition, but
Right.
in this market, there's a lot of ways that you can use who you choose as leverage to get your deal.
Gotcha.
Um, Banks close at 5 o'clock every Monday through Friday. If you call your bank because you need something from them after 5 o'clock, you're not going to get an answer. Also, when you call a bank, you're probably going to talk to a different person every time you call in there.
Mm.
And so being available after 5 o'clock, being able to, send a pre-approval letter at Saturday night at 10 o'clock or 9 o'clock. I mean, if you got to find somebody that'll do that for you. Also, banks, listing agents don't like offers from banks because
Mm.
they know that they take longer, and they know that the banks are prioritizing deposits more than they are, making mortgages.
Right.
That's
Right.
the bank's first priority is deposits. I don't care
Gotcha.
what anybody tells you. That's what it is. So kind of explaining to them, this, and finding a lender that will call the listing agent, that will do the underwriting up front, and do all these things for you so that and that the listing agent will know and the seller will know, look, it's already gone through underwriting. It's, we're pretty much done. We just need an appraisal and clear title. If you can find a lender that does that for you and is available, answers their phone, that little things like that are going to help you get ahead in this super, super competitive market because
Right.
it takes 6 or 7 offers before you wake up and know that you got to come in 20, 30 grand above with no contingencies or you're not going to win.
Right. Yeah. No, that's understandable. That's understandable. So what is the best way? Well, let me ask you this. Is there anything else you want to cover before we end this video?
I can answer any questions. I'm trying to think of other things here. I can't think of anything.
You can't think of anything? Okay. Well,
Nope.
we're gonna do more of these videos, so we don't have to um
Also, for Abraham's, side of it, one of the things we talk about is you got to find the right agent,
mhm.
and in doing so, you want to have somebody that's local to the area, that's been doing this a long time. And let me tell you something, Abraham is a great negotiator, and that's a very, very, very important part of this. Like you have to have somebody that can read the other person, try and get to the bottom line. Why are they selling? Does this need to go fast? What can we do to get an advantage? And having somebody like Abraham is gonna get you to that point.
Thank you. No, I appreciate the plug. Also, I want to make sure if you made it to this part in the video, just remember I'm in Northern Virginia. Jay actually is licensed. Is a mortgage lender who's licensed in the entire state of Virginia. So, if you're interested in using the Virginia Housing Program, formerly known as the Virginia Housing Development
Authority.
Authority, yes. Then
Almost at it.
yeah, almost. That A always gets me. So Jay would be a perfect person to reach out to, no matter what part of the part of the state you're in, and we could also assist you in finding a real estate agent if you're not in the Northern Virginia area. Jay, what's the best way for them to get in touch with you if they have a question?
Yeah, my cell phone is probably the best. 703-582-7481. And jay.hoffman, Hoffman, at movement.com. There's my email address.
Okay, excellent. And you can reach me at 703-539-2053. My email address is abraham@askawalker.com, and I'll put those on the screen, Jay, when this is published. Thanks so much for watching. Also, thanks for watching the previous video too. So if you watched the previous video, we appreciate the views. We appreciate the comments. Anything else you want to end with, Jay?
Yeah, so if you guys want to comment on maybe another subject that you would like us to cover in future videos, there's so much for us to talk about. It's like, if we want to hone it down to something, in particular, please feel free to comment and let us know, and we'll try and include that in the next one.
Okay, perfect. You know what? Maybe the next video we'll do is a video about how not to write an offer, or like what not to do, right? Like on the lending side and also on the buyers,
Sure.
on the agent
Absolutely.
side.
That's a good idea.
Excellent.
I got a long list.
Excellent. Hey, Jay, thanks so much for doing this.
All right, Abraham, have a good day.
All right, man. Later.
All right, take care.